So how do we trade these trends? There is a popular saying that the trend is your friend. In other words, we trade according to the trend. When the trend is bullish, we look for buying opportunities. And when the trend is bearish, we look for selling opportunities. To trade trends, we need to have an idea about a market structure. Basically, this is how the price moves, forming structure that helps us interpret the overall market condition. This is a graphic representation of market structure. Usually, the price moves in such a way. It has a strong move in one direction and it retraces and moves and continues to move in that direction until the trend comes to an end. So in a bullish market, the price will usually move in a strong uptrend, which we call an impulsive move, and retraces for a moment in order to gain momentum to further move higher. So the strong move up is the impulsive move. When it retraces, we have the retracement move. It moves further up, retraces, moves further up. So it moves in this zigzag format. Then also in the bearish market, the price will have a strong move down. It will pull back to gain momentum and further move down. It will pull back, gain momentum, and further move down. So in an uptrend, we buy on dips or retracements near support levels. In such, you can look at the bullish market. So the price moves up. When it retraces and starts moving up, this is when we start looking for buying opportunities. The price moves up, again it retraces. So we buy when it retraces. It is not wise to buy when the price is in an impulsive move because it can retrace and it can hit you out. In a downtrend, in this case, we sell pullbacks to resist. We sell pullbacks to resistance levels. We look for breakouts below the support. As you can see, the price moves up, then it has an impulsive move down, then a pullback. So when the price pulls back, this is when we start looking for selling opportunities as to further continue moving down. So when it has an impulsive move, we wait for the price to pull back and we can start looking for another selling opportunity. Moving further in the range market, in this case, we buy at the support level. The support level acts like a floor. When the price reaches, it usually reacts and moves back up. Then the resistance level acts like a ceiling. When prices reach this level, they tend to react and further move down. So we buy at the support level, targeting the resistance level, and we sell at the resistance level, targeting the support level. So in this case, the RSI, the relative strength index, at this point was above the 50 level. So we can say the market is bullish. So if we add our moving average, what is it going to tell us? So we click and add our moving average. So let's see. So you can also see according to our 200 moving average, it is also showing us that the market is bullish. And if you're very critical, yeah, so you can see. So our tools at this point showed us that the market is bullish. So we could make a buying here. Just tips about these trends. The trends on the higher time frame are more significant than the trends on the lower time frame. As you can see on the 4-hour chart, it is telling us that the market is bullish. So this is the overall trend. But when you move further down to the 15, you can see in the 15 chart, the price has crossed below the 200 moving average. So on the 15, it is telling us that the price is now bearish. And if you can see, even on the RSI, there is no clear move because the price is just moving, around the 50 level. So at such a point, you need more tools to confirm the market direction so that you can be able to trade more profitably. But then you should consider the higher time frames. So we go with the higher time frame, which is telling us that the market is bullish. So we wait for the lower time frames to align with the higher time frames, and we can be able now to make a trading decision. You should not only use this to make your trading decisions. Just because the RSI is below the 50 level doesn't mean it's now the market is bearish and you should start selling there and then. No, you should look for other tools of confluence. You should look for other tools to help you confirm. That's why later on in other videos, we shall get into the chart patterns, the candlesticks, and combine all this information, and we shall be able to trade more profitably. Thank you for watching. Stay blessed.